Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Monday, the 11th. And it was a quiet type of day. I think that you can probably come up with a couple reasons on your own why it was a quiet day. We've got a lot of and for my take is we've got a lot of information ahead of us this week. Tomorrow is a CPI report. And some of the big institutions don't like to make make a lot of big decisions in terms of adding risk or just overall, a big deviation from what they're doing ahead of a big report. So I will get to that. I'll talk about, there was some themes that played out today and some things to watch for this week. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're talking about is for information purposes only. So yes, the main event for tomorrow, and I know that we've been getting other data points that are some components of the inflation numbers. I'm just going to blow this up a little bit so that you can see it. But so tomorrow we're going to get the CPI month over month. I know what happens usually, guys, is what people look at all these brokers put out these estimates for the year over year. Well, the year over year is just a compilation of the last 12 months, and you're going to kick out the CPI report from 12 months ago, and you're going to replace it with the one that we get tomorrow, and then that gets added into the overall year and year over year adjustments. So we know already what the last 11 months are. So what's going to move the needle is the new information, the month over month. So they are expecting a higher number. 0.4, which is even higher than what it was last month. Again, for what they're expecting. So I don't know. Sometimes there's seasonal factors. I'm not a CPI expert, but I don't think we want it coming really in line because it shows that inflation is still running hot. If this number comes in 0.1, 0.2 tomorrow, what do you think is going to happen? Probably there's going to be a little bit of a movement, maybe back into a little bit more aggressive things. Probably, the IWM small caps and micro caps have been most sensitive to the CPI numbers in general. So I would be watching that. We talked about that a little bit on Friday too with the jobs report, right? That was the big data point for the jobs report. I thought was our average hourly earnings went down a little bit. So, that is one of the components of inflation, and we'll see if that we're seeing that in other places with the CPI report tomorrow. Also, right, what I think is going to be interesting is you get this report at 6 o'clock in the morning. It kind of tells you how small businesses are doing, right? This has not been particularly like wonderful. This number that's been coming out recently. So you can kind of see like last month it went down a little bit. We want to see business optimism kind of come back up a little bit. I think that actually, I know everybody's fixated on inflation and that could possibly really get the market to move, but I think we want to see small business optimism get better too. So I know that's not going to move the market unless it's really much different than expectations, but I actually think that's pretty darn important. And I always try to tweet that out the morning, and it usually does come out the same morning as the CPI for whatever reason. And then further for the rest of the week, just so that I'm not not mentioning it, but you also have retail sales and PPI, right, which could also kind of move the needle too, depending on what those expectations are. Interesting that they're looking for like a really hot number. This is retail sales month over month. So sorry, that's retail sales month over month. PPI is down here. PPI is 0.3 is what they're looking for. All right. So it was a sleepy day, and so I may need to go over things a couple times after today. There just wasn't a lot of price movement. So one of the things as well, when I bring up this spreadsheet, right, that I talk about is not only obviously the percentage for the day, which is in this column, but basically what happened after the close. And that's what I'm referring to. I'm just going to zoom this in a little bit here so that you can see these numbers. But you know, look at the SPYs and the Qs. I mean, they barely moved during the session. So again, kind of goes back to what we just discussed about traders not really wanting to make a lot of big decisions ahead of the CPI report. So there really wasn't much fluctuation. Interesting, the Dow stocks actually outperformed a little bit. It definitely felt a bit more of a defensive or lower volatility type move. I'll talk about that in just a second, but interesting when you look at this Dow chart, and I'm going to cover a couple stocks. Right, I haven't really talked too much about the Dow stocks recently because there's just been momentum and more excitement in some other areas, but you know, the Dow stocks might really kind of come back into play for in the short term if we continue to get more of what we saw today. Right. The small caps and especially the micro caps underperformed a little bit. I don't really want to make too much of that. I don't know if it's telling going into tomorrow. Sometimes it's just kind of a knee-jerk reaction. Folks are sometimes unwind trades or decide what they don't want to have exposure into tomorrow. So I think that's more more significant than anything else. Bonds, not too much of a move. Gold, not too much of a move either. Bitcoin, continue to go higher. I'm just going to go back and forth between a couple different charts, but you know, here's Bitcoin up to 73,550. So that's, you know, we were talking about this, you know, that the miners haven't really been following recently what Bitcoin has been doing. Like this is Mara blockchain, you know, not Mara blockchain, Marathon Digital, right? So you know, this stock sold off, and I think a few of the other ones sold off. You know, so you know, why did they do that? Well, I don't have the number one answer, but you know, I don't have the answer to tell you, but I can kind of say that, hey, I've got an idea why they didn't hold up as well, because they're more growth stocks and they're very high growth stocks. And today just wasn't the day for growth stocks. And I'm going to go through a couple examples with you. But before I did that, I wanted to you know, I wanted to go through a couple more of these bullet points, just so that I'm being thorough here. But you know, the other thing that is an event for this week is triple witching, or they like to say quadruple witching, even though they don't really have stock futures anymore. But one of the ones that I always talk about this week, because just people don't know about it. You know, people know that there's of course a monthly options expiration, and everybody tries to put more weight into options these days. I get it, but there's also the futures contracts for the indices, right? So S&P, NASDAQ futures, Russell futures, those all expire. Their quarterly contracts officially expire on Friday on the open. Right. And they go out at something called SQ, which is a special quotation, right? And that goes out on market on open on Friday morning, right? And how that's determined is the special quotation is based on where the basket actually closes. Remember, with an ETF and with futures, it's always about what it tracks, right? So for example, of course, like SPY or S&P futures, right? They both track the same thing. It's a basket of stocks. It's a basket of 500 stocks, right? Now that basket has weights and so forth, and there's a divisor. So in any event, you will see a lot of volume on Friday's open, because that's how they expire, and those remaining contracts that are left for March, and then June is the new month for futures. So yeah, that's how that will play out. And then, of course, the other thing that people really don't understand that much, unless people do understand, for the most part, this is what I believe anyway. I'm not trying to say anything. I'm not trying to be derogatory or anything like that. It just is what it is. People always think index rebalancing when like one name goes in and another name goes out. Okay, those are one-off index rebalancing. But the major index rebalancing is the quarterly S&P and NASDAQ rebalancing, plus the Russell, which won't occur on Friday. That's a couple weeks away, but I believe it's a couple weeks away. I'll have to double check that. But so those will really require a lot of stock to trade, right? And I was having a conversation with someone on Twitter about this, and it's perfectly fine to not understand this. It's not really mentioned that much. It's not mentioned as much as, like, there's so much, like I said, there's so much attention to options these days. But there's a lot of stock that moves around, and the easiest way I can explain it, right, is when you look at some of the equally weighted ETFs. So I tend to talk about this once a quarter, but you could go through, like, for example, the SPY and the Qs, right? They're a modified, I think it's called the float market cap weight, right? So there's not that much adjustments that have to be made with those types of indices. They do rebalance too, but it's easier to understand when you think about an equally weighted ETF. So, there's a few of these things. So, for example, like XHB is one of them, and this isn't going to deviate too much, but just to give you an example, right? Builder's first source, right, is the highest weight. So let's go back again and explain what this ETF is, right? It's an equally weighted ETF. That means every name should have the exact same weight. So when you're looking at this, and you say, well, okay, Christian, you just said this is equally weighted. So why is Builder's first source 4.6%, and NVR is only 4%, and MDC is 1% of the basket, and LGI is 0.7%? So what's happening here? You told me it was equally weighted. How come the stocks aren't equal? There's slightly different weights going on here. Well, going back to quarterly rebalancing, right? The index provider only resets this once a quarter. So the last time they did it is December. What happened between December and March, to the present day, is there's certain stocks that have outperformed. And by just the way an index works, if some names go up, they become a larger weight in the index. If some names go down, they become a smaller weight. So you could go through all of these, right? Like XBI is another equally weighted ETF, right? And I don't know why that's not getting the constituents for this. Let's try it again. Oh, because I'm typing it wrong. That's why. All right, so if we look at the, again, I don't know why this is not coming up, so we'll try another screen. Sometimes Bloomberg is just a little bit slow, but it's not wanting to give that one up either. XBI, and what's the other one? XRT. There we go. I don't know why XBI is not coming up, but it's the same concept with XRT. It's an equally weighted ETF. Why is Carvana and Abercrombie the largest weights here? Because they've gone up the most comparatively to the other names in the basket. So I know that's a long-winded explanation into. So what this means is to get these weights back to what the others are, around 1.5%. What has to happen is, if as long as there's more long assets tracking this ETF, right, the index provider has to sell this, and it will all depend on how many assets. So when we look at XRT, right, how many assets? Well, look at the assets. $427 million are tracking this ETF, minus the short interest. Sometimes there's more short interest. There used to be back in the day, more short interest in this ETF than there was long assets, but that's a whole nother story. So it's the outstanding shares and the total capitalization minus whatever the short interest, and that net number, right? So you can see the short interest is 18 million shares. Right. So this is what an index, this is what, if I worked on a portfolio desk or did some portfolio desk functions while I was on a Delta One trading desk, right? So you can see there is more short assets right now in this, right? There's only 5.7 million shares, right? And there's nothing wrong with that, by the way. Don't go into conspiracy theories. They can, what do they call the APs, authorized participants, right, can actually create and redeem shares and back and forth. And what they'll do is, if there's more short interest, right, for the ETF, they'll sit long the basket and they'll be short the ETF. So one and one, it's the same, right? But that's where it comes into those, right? There's real shares that are tracking these, so therefore this has to be reconciled, right, for quarterly index rebalancing. So I'm going to move on for this because I give you all the detail, a lot of details about that. But what that means, right, being that will happen on Friday on the close, people don't wait, brokers don't wait till all the way till Friday. If they know that there's going to be a lot to trade, they start trading it now. Right. And that's why you have some of the fluctuations today where a lot of the leading names just had nothing to them today because there is forces out there that are basically probably selling some of those shares. Right now, again, I went over a couple of these indices, but there are lots of ETFs out there, and it doesn't matter how many ETFs are actually out there. It matters the assets that are tracking the ETFs. Like anybody can come up and create an ETF. It's not going to influence anything. What influences is how many assets track the ETF. All right, so let's move on. So if we look at some of these areas that outperformed, yeah, it's been some of the underperformers. But that obviously is not the whole story. Just like when we talk about seasonality or we talk about, that's not the only factor out there. So like the index rebalancing. So I wanted to go over a couple charts with you guys, and I will talk about the S&P futures, which I know it seems like every time that we sell off just a little bit, it seems like you get the what's that old that that nursery rhyme, right? The sky is falling, right? I don't really see the sky is falling here because there's nothing really to get that excited about. You could pretend that something bad is happening here, but the S&P is in a range, and we'll take more note if the not in a range, a channel is really the word to describe it. If we break this channel, right, then we'll have something to worry about. But until we do, it's all kind of hearsay and speculation, right? And until and I think if you don't have the value areas, which I think give a really good guide, let's look at the 20-day moving average. So S&P, it's pretty intact. Now again, it could change, and I think what might be changing here is like a little bit of a changing of the guards, is that the Qs are showing a little bit of relative weakness, right? This is now inside the value area. And there you can see that the bearish 80% rule has been triggered, which means that there's an 80% chance that we can go from one side to the other. Now, am I playing that rule? No, because I when we just get into the value area and there's a moving average that price is right on, I usually wait for the moving average to be broken. Oh, look at this. Oracle's moving up quite nicely after hours. So I would watch right where I've got that cursor. I would watch the 20-day moving average, and maybe I'll play that bearish 80% rule if that's broken, right? But I think you can kind of say that there's some relative weakness going on there, and that happens from time to time. Here's IWM. All right. Oh, and I was just going to show you too. I do this sometimes. Sometimes I forget to, the other thing to note, because I will watch these 1-hour charts because sometimes you can find some clues off of them. Notice that the S&P, right? So going back to the S&P, which looks a bit better than the Qs, notice that this basically broke or try to break the support here of the 1-hour value area, and it held in it, and we did not. So that's perfectly normal. Qs, on the other hand, are, they're also inside value. Pre-market, this was broken, but we're still holding on to this, right? And you can see it's actually the bullish 80% roll on the 1 hour. So the daily chart is saying bearish, and the 1 hour chart is basically saying bullish for now, as long as price stays above 436.87. All right. So again, you kind of have some mixed signals right now. IWM, right? No bullish or bearish rule here, but also on the bottom side of the 1 hour value area. So we don't have any break with all three of those really when you look at the 1 hour chart. So it's best to kind of continue to monitor. All right. Now, it doesn't mean that there's not going to be rotations, right? I've been hearing this a lot in the last couple of days, like, oh, could we get some rotations, right? Well, I don't know where some of these people have been, because that's been taking place now for weeks, right? And probably for more than a month. So I get it. The media is only fixated on a small group of stocks, but that's not our fault. And I don't know why that they have been so fixated, but we've already seen a lot of rotations and pretty decent breadth, right? So we've seen rotations into the industrials, into healthcare, into materials the last couple of weeks, into financials, right? Has already that to some extent has already happened, right? And there's been some relative weakness in tech. So that's not a new thing. That's been happening for the last. So here's tech. And if you don't believe me, look at what tech has done over the last month, right? It's done nothing, right? But look at the industrials, right? Now again, they move slower, right? And we know that the semis have been doing their own thing, like they've been acting differently than overall tech. But here's XLB, right? Which is materials, right? I started talking about the materials about 3 weeks ago, right? And saying it's the first time that I tweeted this out, and I said that this was a slower mover, right? But look at the performance. So those rotations they've already happened. So again, they're really late with not, and again, it's not it's their fault for only covering so few stocks, with their head up there, you know what, right? And I get it. Nvidia, it's going to, like, if I was a media company, right, and was getting paid by commercials, then I probably would talk about Nvidia all day long, right? And rather than other things. But this is what's been going on now for since the beginning of the year, essentially, is financials have done really well. So what could be now let's get past that, right? So what could be a newer rotation? Well, you haven't had me go over the diamonds too much recently, just because they've been slow too. But yeah, I'm open to the possibility that maybe this group begins to outperform, right? And we really haven't seen too much from the defensives, but I don't know necessarily if this is first of all, I do know that that's the wrong symbol, right? So this is minimum volatility equities, right? There's a lot of energy in here. There's a lot of consumer staples, some utilities, right? Things of that nature, right? And this acted very well today. Now, again, you kind of have to think about, tomorrow you've got the CBI report. Maybe folks are a little bit more comfortable holding a Johnson and Johnson, or holding, because those areas did very well today. Right, here's what Johnson & Johnson looks like. I mean, it had a real nice turn here. Moderna had a big day today. Pfizer had a good day today. Mickey D's, McDonald's looks very interesting, right? In terms of, maybe breaking out of the value area. So this is a chart that's interesting to me, right? Maybe you see something like this that gets rotated into, right? It's probably a little bit cheaper than, some of the bigger tech names, right? But again, all of that is quite normal, right? To see groups advance and then see some profit taking, and then other groups get a little bit more attention, but that's normal. I thought I was listening. I had CNBC on earlier, and Chris Verone was talking about that. It's okay for other groups to go up, right? Such as utilities. They haven't done anything all year long, so if they want to go up here a little bit, right? I'll zoom out here just so that you can see what I'm referring to. It's okay for them to participate, right? Like, it doesn't mean everything else is going to, that everything else is going to stop just because utilities start to come up a little bit from the lows and not break down. And it's okay for the consumer staples to go up too. It's not going to be the end of the world, all right? It doesn't mean everything else is going to automatically go into a bear market, right? It's just a little bit of rotation on the tape, all right? And again, part of that has to do with quadruple witching and index rebalancing. A couple other things I was going to talk about. So again, I'm looking at some Dow stocks, right? And things like McDonald's. Also, the Chinese Internet Group had a good day today. Again, notice what's happening here. And I've talked about this several times in the last couple of weeks. We've got a lot of overhead resistance, right? So we could just isolate the weekly chart for now, right? And notice that you've got resistance, right? So this big block here is the bottom of the value area for this year, right? Which is based on all the volume and price activity from 2023, right? And notice it's having an issue, right? And now if we just look at the daily chart, and I'm going to hide the yearly value area. Yep. And you're also going to notice that there's some resistance here. And even though this had a real nice day today, it could not get above the value area. So I just wanted to mention this group because it was your best performer, but no change really in trend yet, right? And I would continue to watch this 26 level as well as this 2644 VPOC, which this could be taken out and it still doesn't change the trend. All right, so I wanted to talk about one other area too, which was something we went over on Friday, but I think it's interesting what's going on with these payment companies. So I'm going to put this back on here. All right, so this is Square, right? The Square has been going sideways for a while now. Visa is another name in the payment space, right? So this is also a name in the Dow, right? So again, like Visa might be the way to go here for me if I decide to get involved. And I did put this one on the watch list for members this week. So that's Visa. But also, if you notice, like some of these other names, like Toast, right, got above the value area. About a week and a half ago, right, on strong earnings. So I still like this. Notice it's doing okay here, right? It didn't have a tremendous day today, but it held in there, right? And then I see a lot of people talking about Four, right? Four also, and I know that there was some speculation about this name being an M&A target, but all of these payment type names, I'm not going to look at PayPal right this second, but a lot of these names that handle payment processing are actually looking pretty decent here. Last one I'll go over is MasterCard. I always like to trade Visa a little bit MasterCard, but the charts are very similar. All right, so that's another focus area that I'll be watching. Just how it's showing, this group has been showing some relative strength. There is an ETF for this, right? It's called iPay, right? And it's actually been performing quite well over the last like month and a half. It's broken out of its range and it's been trending quite nicely. All right, guys, that is it. Again, so we've got some big events this week. I try to go over them a little bit with you, and those might dictate some of the moves that we get this week, or at least should be impacting the moves. All right, guys, have a great night, and see you tomorrow.